Hey guys, Mike here. So obviously here we are starting another week, and it's going to be a big week for earnings, which we're going to go over. The good thing is the economic data coming out over the next really week or two really shouldn't shift things too much at all. And so we'll see how that goes with the market. So there shouldn't be any economic news that we know of so far coming out that should blow the market up one way or the other. And you know, the big thing is probably what happened on the weekly chart for the S&P, which we're going to get into, and I'm going to show you it's not all that bad. Exactly how the market will most likely respond, I'll tell you that as well. And then I'm going to show you something that I'm starting to track now, which I discovered the other day about, you know, are we in recession, are we not in recession, all this fun stuff, which we got to keep track of, right? And so, and this is something I'm doing because there's certain plays I want to make when I feel comfortable to say, hey, yeah, I think we're definitely in a true, real recession where unemployment's going way up and things are getting really bad. And so I'll show you that right there and show you kind of like, I don't know, technical recession, yes, real recession, no. But the big news is coming out really, we closed. Remember I told you this, we would watch the weekly chart to see if we close below that 200 moving average right there. And of course we end up closing really right below it, not too far below, but right below it at 35.83, as you can see. And so of course everybody's like, oh my God, this ain't good. And no, it's not bullish at all. It's definitely bearish. I mean, we got the kiss of death confirmed, we got this confirmed now. And you can see really down below, there's a couple support lines coming below that. I mean, 3,400 is not that far away. Right above it, you got a nice gap coming up, but you also have the 20 moving average right there. And you know, the markets love to back test, and so that's definitely going to be something we're going to see eventually. It's going to move up and probably end up trying to back test this. Of course, before it does that, when you go to the daily, you can see that trend line which I finally put in there, so I didn't have it in there Friday for you, and the 20 moving average right there is major resistance. Right above it, of course, is that big gap we still have not filled, as you can see. And so we got to get through all of that if we're going to be expected to move up at all. And you know, but is there anything to move us up? Who knows? If we do move up, I think it's on technicals. It's on the fact we just don't have any major economic data coming out that should shove the market down any lower, since we just got the bad CPI report, strong labor support, you know, all of that right there. So this is what everybody's gonna be watching to see if we break above these two things, because if we do that and fill that gap, short term, that is bullish. That's the way it is, and a lot of people will be expecting us to try to see if we go back to the 5.0 Fibonacci level or the 618. We'll see. That's what a lot of people will be watching out for. And please hit that like, subscribe button, and share the video if you get anything out of this, guys. I really appreciate it. And of course, what will drive markets for sure is going to be earnings. This is what we've been waiting on, right? Second quarter is supposed to be disastrous. I didn't think they were that good at all. But again, the bar was super low, and I don't have a stick to throw on the ground. But the companies, all they do is trip over, and their stocks are going to go up or just not sell off too bad, right? And so that's what we're going to see very early on. Is that the case, right? You got, you know, semiconductor stocks, they'll start coming out most likely, trying to preempt their earnings. One had already done that, and AMD, I believe it was. And, you know, so that's where we're looking at that. There's going to be certain sectors that will still do good in earnings, or at least decent, right? And there's going to be certain sectors that are still going to continue to get hammered. But this, again, everybody's just looking to see, how's the economy look? How does we, the consumer, look? And are we still spending, right? And when you look at these earnings, we got a whole mix going on here, right? We're going to have more financials coming out here on Monday, as you can see. And so we'll get to hear from them. And then really in the PM, I don't see much. I mean, Rio Tinto, I guess you can pay attention to if you want to do that. And then going over to Thursday, again, Goldman Sachs, you'll have Johnson & Johnson come out. Then the PM, you're going to end up having Netflix. With people will watch that. I mean, they just rolled out where they're going to start doing ads and stuff like that. United, are we still traveling? It's going to be another one. AM on Wednesday, I mean, I don't see anything that's really going to move the markets over there. But then you're going to have Tesla, which everybody will be paying attention to, because that stock has been under major pressure, and so is pretty much all of the car stocks have just been getting hammered, right? Then you have American Airlines on Thursday. Again, are we still traveling? Snap's been crushed. I probably won't listen to it, but we'll see how that goes. Whirlpool might be an interesting one just to see anything to do with the housing market, or are we still, also as a consumer, still buying, you know, dishwashers and wash machines, all that good stuff. And then Friday you'll have Verizon. I believe they were one of the companies that came out with some crazy stuff last time about people not paying their phone bills. And then American Express. Or are we charging those credit cards up more and more and running up the bills again? That's how we're paying for things, is we're running our savings down. And then there's China, where people thought, you know, the president was going to roll back his zero COVID policy maybe to try to help their economy. But he seems to be doubling down on it with the comments he's making already to try to preempt this meeting they're going to be having from the 16th to the 22nd of this month. And so it doesn't seem like they're going to be loosening anything unless they change it this week. We'll probably know, which is, you know, I guess surprising and not surprising. I mean, you think you want to help the economy out by stop doing that and taking that uncertainty away. If he does, it'll be extremely bullish, you know, short term for sure for the market. So it's something a lot of people are going to be paying attention to. And, you know, I have no idea why the guy wouldn't do that. I mean, I know stubbornness. I got plenty. I mean, I'm stubborn. My son's stubborn. But this guy, I don't understand it. I don't know if it's the plan just to run his own economy in the ground. That way it hurts everybody else. Who knows what this guy's doing and their Communist Party? I don't know. It doesn't make any sense. People locking people in the buildings by now. The rest of the world is opened up, and we seem to be doing pretty good, trying to get the economies back online. But he just seems to be refusing it, and so I don't know. But then again, I mean, I think they're up for election or something this week, and so I don't think there's a real election. I mean, it seems like he's in there for life if he wants to be, but you know, it is what it is. I mean, hopefully their people will fight back or something and stop that. But there was one indicator I'm been looking at. There's a bunch of them I'm putting together to try to track, because there's a lot of plays, which I'll do videos on this as well. But there's a lot of plays to be made. You know, when we really go into recessions where unemployment's driving up, people are losing their jobs, you know, can't pay their bills anymore, then all of a sudden you're seeing delinquencies go up through the roof and all this. And so, you know, if you know, or at least you can kind of spot when you're in it, because remember, you won't know about an official recession until a long time after, but using indicators, you can have a good idea. Then you can set up some pretty big plays, which I've been looking at and stuff. And this one right here, you know, there's two of them, which I'm going to be looking at. One is the Conference Board Leading Economic Index. The other one is the Conference Board Coincidence Economic Index. And you can see right here, I mean, when you hit these recessions, 01, 08, 2020, you see the big turn down on the top one, right, which is the Leading Economic Index. But then when you look, when you're in the recession, that's when you'll see, and I hope I'm pronouncing this right, but the Coincident Economic Index, it actually turns down when you're actually in the recession. Of course, you don't know you're in it, right? And so you can see it happen in 01, 08. You can see 2020. I mean, obviously that was just I didn't even talk about that one because that was so fast. But you can see right now it's still going up, right? And the other one's curved over. And the reason why it goes up, or the reason why you kind of know right there, oh man, we're in a recession, is because this one, which is the one I'm watching more closely, is made up of what? Reflects unemployment, household income, industrial output, and business revenue. And so that makes sense, right? Because these are the things that get hammered when things are going to hell in a handbasket in your economy. Because what happens first? Demand slows down, so obviously the industrial output is going to go down because companies are going, we don't need as much, we're not selling as much, their revenues go down, then they start to lay people off, and when they do the layoffs, then what happens to, obviously, household income? It goes down, right? And so, and of course, then in turn, we are spending less. And so that right there is the reason why you can see that one turns down dramatically, very quickly actually, when you're in a real recession, even though we don't know we're in it. And, you know, so it makes sense for me to follow that one every month just to see where we're at. And as soon as you see it start to turn down dramatically, you kind of know. And so we'll see how that goes. I'm going to start tracking it. There's other things I'm actually going to start tracking as well to see, because, you know, I'm doing some videos for members now. It's surprising, like when I looked at oil and other things, real estate, stuff like that, they don't really react how you think they react in a recession. It's like kind of like the opposite of how you think they'd react in a way. And so, you know, I'm going to be putting that out to them as well to kind of see and come up with some plays for sure where you can make a lot of money very quickly if you can get, you know, a good timing or sense of it, instead of just, you know, walking through life blindly going, well, maybe we're in it, I don't know. You know, so we'll see. But it's obviously that indicator is still trajecting up, because what's happening, unemployment's 3.5%. We still got money, right? We still got money. There's not a lot of huge layoffs going on, right? We got seasonal jobs coming open right now in the hundreds of thousands, if not millions, around the country right now. And so, and to me, like, this earnings, people think it's important. It's actually fourth quarter to me is the most important, because if you have a bad holiday season, and we're not spending the holiday seasons and stuff like that, that's the big one, right? But this one, obviously, people are going to be watching. The biggest week will be end of October, around like 22nd through the 28th, I believe. That's when all the big boys report: Microsoft, Apple, Google, I believe, Amazon. And those are the ones that everybody's really going to be watching. But you'll have the smaller earnings here coming up, and you're going to have certain sectors do well, right? And you're going to have certain sectors that are still going to be a dumpster fire probably. But the one thing I watch out for on a technical level is when you break the 200, as I said in the beginning, you're gonna eventually have a back test. That's the way it's gonna be. It doesn't just break and go straight down. Usually back test up, or break back through it, or hit the 20 or the 150, whatever, try to back test those. And then if it breaks it again, obviously you're probably heading straight down. That's what you're looking for. And so, you know, on the technical level, there's nothing long term that's bullish right now at all. Okay, that's just the way it is. We gotta accept that. And trust me, I'll be glad when I can get back doing bullish videos and positive stuff, because, you know, I do members news briefings every morning, Monday through Friday, for the members and stuff. And, you know, hit the link down the bottom if you want to get that. And, you know, it's depressing sometimes, honestly. I got to look at it every morning, first thing in the morning. That sucks to start your day off that way. I'm scouring, trying to look for positive news of any kind I can get. So if I get any positive earnings, I throw it in there, you know, because you want that. But I'm not going to sit there and make news up like the real news channels do and try to sell you on it, because, I mean, unfortunately, in the real world, bad news sells, and that's kind of our fault that we watch them and program them like that. But, you know, it's the way it is. You know, if you look at the most watched financial channels right now, it is the doom and gloom channels, bar none, absolutely bar none. You know, doesn't work. If you try to do education, you know, get no views. Positive stuff, no views. It's doom and gloom, right? And I just refuse to go with the doom and gloom crap, as far as like just coming out going, the banks are going to take all your money. That's the big video now, by the way. If you hadn't seen it, it pops up everywhere. You know, I'm just trying to present to you what's happening. It's the way it is. Take it for what you want. Don't take it, whatever, you know. But that's where we're at. So, you know, let me know in the comments what you think, what you're doing, what you're seeing out there. And I appreciate all your input and everything. And I will see you tomorrow morning on Monday, and we'll see where we go from here.